Hey, everybody. Happy Monday. Jeffrey Beamer here, Senior Investment Strategist over at ewotrading.com. It is Monday, July 1st, first trading day of the month of July. And believe it or not, we have a big week this week, but for different reasons. And we're going to go ahead and start off the day by talking about what we did last week, because to end the month of June, boy, did we hit, I would call it at least a triple, if not a home run on FedEx. All right. FDX, that was our trade of the week last week. We were looking for a breakout. FedEx delivered. All right. The stock jumped. It was up 15% throughout most of the day. We were able to profit over $2,000 on our $1,800 worth of risk. And that would be 114% return on risk in just a 24-hour trade. Now, we don't like to brag about these, but we do need to allow for some excitement when they happen. All right, because I definitely don't mind hitting single after single after single, occasional doubles, maybe a triple, but this is borderline between that triple and that home run that we like to see. So FedEx, it delivered, as I mentioned, and now we get into a very quiet period. We're going to only have a few earnings this week as we get into a holiday week. Let's jump right into headlines this week. As I start off the bat, I want to let you know that it's a very light week. Earnings, we only have one big name, which I'll talk about in a moment. We only have one big name to talk about, but otherwise, the market is going to be, it's only going to be open for 3 days this week, okay? Or 3.5 days. So the schedule goes like this. Wednesday, July 3rd, the market closes early at 1 p.m. Eastern time. All right, so we only have a half day trading on Wednesday. And then on the 4th, of course, in observance of the holiday, happy 4th of July to everybody. My dad's birthday. I know some other parents have birthdays on July 4th, but it is a big day for the country. And so we take that day off in observance of the 4th of July. And then Friday, we do resume normal trade on Friday. But here's the thing, there's a couple of announcements buried in here. Let's get to it as we jump into the rest of our update. I want to start with charts here for real quick. Well, let's just talk about Spider to start off with. You can see here that we are channeling sideways, okay? We came up. Now, this is an interesting pattern that's developing, all right, because this is, let me get my little marker here. This is, where did it, there he is. Okay, this is when we get a move up like this, all right, then this can become, with this pattern here, this can become let me just use a horizontal line because that's the quickest one that I see here. All right, this becoming a little flag pattern there, okay? So the pull and then the sideways action, this is setting up for a potential breakout. Now, if we get into it today, you can see that we were trading lower this morning, and we have rallied off of that, okay? Market is trading light volumes this week. This sort of thing happens where we drift higher, and I wouldn't be surprised if that happens this week. All right. So, but here's the interesting thing. The spider and the Qs kind of look the same, but if we throw some moving averages up here, I'll add the 10 period. You can see, look at this. We're hugging that 10 period moving average right now. It's starting to flatten out. Instead of pointing up, it's starting to flatten out. And that's evident of this sideways trade here, but we're trading above the 21 period moving average, trading well above the 161 period moving average. That's still a bull market, and we will look for possible breakout later this week or possibly next. And I would not be surprised if it's a breakout higher. Okay. All right. So let's jump over to the NASDAQ and we'll take a look at the Qs. That chart looks just the same as the Spider Index Trust. I mean, we're going sideways on this, hugging that 10 period moving average, as you can see. In fact, I'll put the Hike and a She candles on because I like to look at those. I did not do that on Spider, but the two charts look the same. All right, we got small bodies and wiki candles. Not much going on there. We're hugging that 480 level. I've got a target of 500 on the NASDAQ by the end of this month, early August. So we'll see if we can't get up there. I wouldn't be surprised if we do start to move at the end of this week or early next. But right now it's just chopping sideways. We'll go back to my regular candles here, and you'll see quiet trade the remainder of the week. We jump over to the small caps. They're down about 71 basis points today. They're well off their lows. It was looking pretty ugly there first thing this morning, but as you can see, as I zoom in here, we held right at that 10-period moving average, and the IWM is reacting to the bond market. We're going to talk about bond market in just a second, but we are stuck in this channel, okay, way up here. 195 on the low end, 210 on the high end. Probably okay to probably do some sort of delta neutral trade, trading sideways. It's been there for months and months, just can't get out of its own way on IWM. All right, so moving over to the commodities for a moment. Boy, take a look at USO and crude oil up over 2% today. Big move, busting out of that little flag pattern. Notice I drew that also on Spider and on NASDAQ. You see that same pattern here. A rally up, that's the pulse. Sideways action, that's the flag. And then busting out to the upside. Not surprised there. As we head into a big travel week this week. All right, I did see gas prices creeping up at the pump here recently. Now that's of course on the refined product. That does differ from the raw material itself. But look at USO go, man. That trade is heading up towards that 82.5 resistance area. We'll see what happens when we get up there. If we bust through that, we could possibly see $100 on USO, and that would be a head scratcher. I mean, that could be something. So we'll be watching this closely as we head into a holiday week. All right, now moving over to gold. Gold and silver have just died. They are trading sideways. They are flatlined here. Another range-bound market. This won't last, all right, but it does last long enough to probably put on a good trade, and we'll look for one as we continue on through the week. But gold and then silver, again, not much to talk about there. We did break out of the wedge last week. We did have a lower close that could have triggered a short, and right now that short's not doing too good. If you were trading technicals and you did go short on the 26th, this is technically you could still be in that trade. We're up against that 10-period moving average. As you can see, we're not breaking above it. The trend is down on silver, and you could stay with your short if you are short on gold or on silver. Sorry. So gold is quiet. Silver is still in its little down trend, and even though both are trading a little higher today. All right, let's go to what should be the headline, and that is the Treasury. That is the bond market. This is an amazing move. Okay, it looks similar to maybe a couple of days in the past, but this is bigger. This 2-day move on the long end of the curve. This is the TLT, the 20-year iShares 20-year plus Treasury ETF, TLT. Look at that big move on Friday as rates did not like, rates jumped on some of the economic news that was coming out. I thought that news was pretty tame, but the bond market did not like it. And boy, did it shoot rates higher. Bonds dropped, and then look at the follow through today, over 1.75% lower again today, folks. In the bond market, that is a huge move. That, especially for a 2-day move in the bonds, to move like that is very unusual. Now, if we go to the short end of the curve, that would be SHY. Friday, it was an interesting day, and then finally today it reacted. It didn't react until today. And dropping quite a bit here on news. Now, what this has done is rates are now higher. This big move in the long end of the curve and this delayed move in the short end of the curve, what this has done is has flattened the inverted yield curve. So if we go over and show you that inverted yield curve, you see that we're well off of our lows. We were at 121, 123 or so, and now we're at 112, and that um, is what we call a flattening of that yield curve. This could quickly change direction, so I would keep an eye on it, which we will do for you here. Every Monday, we'll take a look at this. As long as we're inverted and the bond market is doing like it's doing, we'll talk about the bond market, which seldom gets talked about. But if you think the equity market's big, the bond market trounces the equity market. This is where the money is in the bond market. Okay. Now this hasn't really gotten over to the 30-year mortgages yet. If we look at that chart, mortgages have risen slightly, just above 7%, and but it's holding that level. Okay, it dropped briefly below 7. They've been trading right at 7. Now we've inched up just a little bit, but I tell you, home sales are really slowing down. Builders, home starts are slowing down. Inventories are increasing. It's an interesting time in the real estate market as we gear up for that August date. I believe it's August 14th when that NAR settlement gets enacted, and things about your broker and your real estate agent, your relationship with those guys changes. All right. I don't know if it changes for the better, but it's going to change. All right. And we'll see what happens there. All right. So moving ahead, let's take a look ahead at the week we have this week, because I've already talked about what the market schedule is, but I wanted to show you what is buried in here. Okay, on Tuesday, we have the Fed Chairman Powell is going to speak at 9:30 a.m. All right, and then on Wednesday, we have the FOMC meeting minutes at 2 p.m. Now the market closes at 1. All right, so we're going to be taking off and going on our field trips and all this good stuff, and yet the Fed is going to speak. So we could get some volatility in the aftermarket hours going into Friday. Friday could be a very interesting day after not only do we get the FOMC meeting minutes on Wednesday, but then we get unemployment rate first thing Friday morning, 8:30 a.m. Eastern time. We get these two economic announcements. Now, the only trade this week, or the only stock that I'm following really this week, is what you see there on Wednesday, and that's Constellation Brands, STZ. STZ. This is the biggest company. Well, it's $1 billion market cap, so it is a big company. It's a well-known company in the marketplace, and they do have earnings after market close on Wednesday. Interesting that they put them there. And I was waiting. I didn't think we were going to have a trade this week, but we ended up, this trade did qualify this week, and this will be our featured trade of the week. All right. So what we're going to do is watch Constellation Brands, and I've got a little trade on it, and I'll give you the criteria for it. What we're looking for is quiet movement. Believe it or not, this is a big company that just doesn't typically move very fast or very much through earnings. Okay. And right now, until this morning, market makers had priced in a move of about 4%. And that's where the options were trading. So what that meant was you had no edge. You really couldn't do a good trade. But what happened today is implied volatility rushed in even higher, pushed these option prices even higher, and now we developed a little bit of an edge. Not much. Okay, so I would trade small on this. This is an iron condor. If you're not familiar with this option strategy, it's a bull put spread and a bear call spread combined together. Those are two credit spreads. What I'm looking for here is at least $1. Okay, this is a $5 wide spread. That means our max risk is $5 minus our credit. All right, so I'm looking for a minimum of $1 on this particular trade. And if you put an order out there for that spread that's $5 wide, on STZ is the symbol here. and you can't get $1, then you don't need to be trading this. I'd actually like more than that. So I would probably put my limit order at about $1.10 or something like that, and just see if that limit order hits. All right. So with that said, we'll keep an eye on this. We'll feature it next Monday as our trade of the week and see what happens with it. Again, earnings after market close on Wednesday. We got a light schedule. Hope everyone enjoys their 4th of July holiday week. If you got big plans, be careful out there. Light trading week. You could almost take the week off, but we'll see you and we'll be back next Monday right here at the same time. Everyone have a great holiday. We'll talk to you soon.